Welcome to The Explainer. Today, we are cutting straight through all the noise. This is a concise, data-driven briefing on what the experts are targeting for Bitcoin's price in 2025. We're going to cover the numbers and, more importantly, the why behind them. So let's just dive right in. So let's start with the big question, the one everyone wants an answer to. When you look at all the different models and analyses out there, where do the pros think Bitcoin is actually going to top out in this 2025 cycle? And here's the answer right up front. The consensus range, pulled from the most reliable sources, lands somewhere between $150,000 and $250,000. Now, look, there are definitely some outliers, and we will get to those. But this is the core window. This is what the majority of serious analysts are really watching. Okay, so how in the world do they get to that range? Let's start to unpack the specific numbers and the data points that are actually forming this consensus view. You know, a prediction is really only as good as the analyst who made it. So we're going to zero in on what we're calling the highly reliable tier of forecasters, just to see where the most credible predictions are really coming from. This table, it lays out the core consensus perfectly. You can just see this tight cluster of predictions. You've got Carol Alexander at 200K, Charles Edwards is up there at the high end, around 250, Rect Capital also targeting 200,000. And what's fascinating is that even the most cautious view here, from the super data-heavy team at Glassnode, still sits at $136,000. So you put these together, and that's the foundation for that 150 to 250 consensus range. And to put a human voice on all this data, check out this quote from physicist Giovanni Santastasi. He's not messing around. His confidence comes from his Bitcoin power law model. He basically treats Bitcoin's long-term growth almost like a law of nature, a predictable curve. And based on that historical path, his model points right to a cycle high between $150,000 and $200,000. So knowing the numbers is one thing, but understanding why is absolutely critical. What are the fundamental drivers that these analysts believe are actually going to push Bitcoin into six-figure territory? When you dig into all the expert analysis, the reasoning pretty much always boils down to these three things. First, this unprecedented wave of institutional adoption we're seeing. Second, the potential for favorable macro policy from central banks. And third, Bitcoin's own deep-seated historical cycle patterns. This quote from Mike Novogratz just captures the feeling perfectly. He talks about a snowball effect of demand, and that's a huge reason for his $150,000 target. For him, it's not a question of if institutions will get in anymore, it's about how fast that ball is rolling. And building right on that idea, Fundstrat's Tom Lee directly connects the spot Bitcoin ETFs to his $250,000 forecast. He argues that the constant, relentless demand from these new products is creating a classic supply and demand squeeze, a supply shock, that will just mechanically push the price higher. And then, of course, there's the big picture macro argument. Folks like Arthur Hayes believe that as soon as central banks, especially the US Fed, pivot back to easier money policy, investors are just going to flood into hard assets like Bitcoin. In his words, a return to rate cuts will literally turbocharge Bitcoin's price. Okay, but a complete picture means we have to look at the other side of the coin. Any professional briefing worth its salt has to acknowledge the counter-arguments, the risks, the things that could totally derail these bullish forecasts. And right here, this is the central tension in the market. You've got the bulls, who are pointing to this massive wave of demand from ETFs and big institutions. But then you have some on-chain analysts pointing to a pretty big problem. Maybe there's just not enough real underlying spot volume to actually support those crazy high prices. Yeah, according to Glassnode's lead analyst, James Check, the market can't just magically jump to 200,000. He argues the on-chain data is pretty clear that Bitcoin first needs to build a real volume-backed foundation at lower levels. Think 130, maybe 150,000, before any kind of sustainable rally to new all-time highs is even possible. Another key counterpoint comes from the quantitative analyst Benjamin Cowan. His big theory is about diminishing returns. He's used logarithmic regression to argue that each Bitcoin cycle peak is proportionally smaller than the last one. So his data-driven model really throws some cold water on the hype, pointing to a much more moderate cycle top, maybe as low as $100,000. Okay, so we've established the consensus. We've looked at the cautious view. Now let's have some fun and look at the outliers. These are the wild what-if scenarios that sit at the really extreme ends of the spectrum. First up, the wild card. Former trader Josh Mandel, who kind of became famous for correctly calling an $84,000 top, is now forecasting this insane blow-off top to $444,000, followed by a gut-wrenching 81% crash. Now, a lot of people are skeptical, but because of his track record, it's a scenario people are quietly watching. And then on the extreme high end, you've got Plan B, the creator of that famous stock-to-flow model. His absolute best-case scenario, he calls it a supercycle. It basically bypasses the idea of diminishing returns and sends Bitcoin soaring to a potential peak of $800,000 by the end of 2025. And it's really important to separate the 2025 targets from the long-term vision. Big names like Novogratz, Philip Swift, and Michael Saylor, while they have targets for this cycle, they all see Bitcoin eventually hitting seven figures, $1 million or more, in the next cycles, as it starts to challenge gold's market cap. This quote, you probably heard it from both Michael Saylor and Max Kaiser. It just perfectly sums up the core belief behind those really extreme long-term bull cases. The argument is simple. You're not just measuring Bitcoin going up, you're measuring fiat currencies going down forever. Okay, we've looked at the consensus, the catalysts, the big risks, and the crazy outliers. Let's put it all together now and synthesize this into one clear final takeaway. So when we just mash all the data together, the overall average target is around 243,000. But here's the key part. Look what happens when we isolate just those highly reliable Tier 1 analysts. That average drops to a more grounded $194,000. This really reinforces that core consensus range of 150 to 250 as the most probable scenario according to the top-tier analysis. So ultimately, pretty much all the expert analysis points to a bullish 2025 for Bitcoin. But as we've seen, the exact path and the peak, well, that's still up for debate. Some are going to focus on institutional flows, others on macro policy, and still others are going to be glued to on-chain volume. So the final question really is for you. Which dataset are you going to be watching?